dear no. My, that word billion.
Let me show you guys how to get your crypto taxes done in minutes. You need to go to Coin.
All right, mic check, mic check. I think we're just about all set here. Damn, the chat's already popping off. It's so good to see you guys. And I got the stream tweeted out. Got a bunch of good stuff pulled up that we're going to go over today. Definitely a lot to catch up on. Annual reports. Look back at that. We're definitely look at last year's report. Look at the most recent quarterly report, Q3. See what it might look like quarter over quarter. Then, of course, year over year. But here we are. Welcome back. Thank you guys for joining me tonight. You'll see a little bit of a different setup. Since I've last streamed, I do officially have a desktop now. The problem is, where the monitor's at, you can't get the webcam on top, so I have to do this like side view kind of thing right now. I'm gonna work on that. Either got to get it extended or figure out some things, but just getting back in the swing of things. So I'm like, all right, no more delays, especially over like a webcam, So just got to get started with it. But hope you guys can hear okay. Everything sounds good. I think I got everything pretty nicely optimized. Ready to get rock and rolling here. Definitely got to hit the chat real quick. Damn, everyone's here. Love you guys so much. So good to be back. Xbit, 420 Bong Smoke, the king returns. I like that. Thank you. Let's go. North Star, hope you're doing well. Vinny, hope you're doing well as well. Jay, same to you. North Star be dunking on these fools. Let's go. Yes, sir. I mean, it's a shirt, not me. What can I say? Sources close to me have told me GameStop's a great company. That's just what the sources say, not me. Can't lie. Those sources say what they say. So hit that like, stopping in to show love. I appreciate that, Jesse. I really, really appreciate that. Seems like the webcam may be lagging a little bit. I wish I could watch them about aboard a plane. It's all good, POJ. Catch me next week or whatever the next stream is. Definitely the first of many to come. So it's all good. No worries. But I think the webcam may be a little bit laggy, but It is what it is. Let me know if you guys got anything. I have to go to potty on second, please. No worries, man. I'm here. We're here. It's all good. Let's make sure I got the all chat here. Yo, ready for the Rockets, Jay? Hope you're doing well. Good to see you as well. Just get this a little bit in a better spot here. Definitely gonna go through some GameStop stuff. And I also just want to talk about like markets as a whole and just everything going on since I've last done a stream. And I've still been, keeping an eye on things going on, but it's crazy, right? And the markets have always been crazy. And every time you feel like you're like, oh, I really understand this, right? Then some other bizarre things happens. Like just that's the world we live in right now. Right now, the hot topic is like NYCB, New York Community Bank. I believe that's the official name. They just had like an emergency injection of like $1 billion, raised a bunch of investors led by Steve Munchkin or whatever his name is. I don't know, Munchin, whatever. But it's crazy. What a time, right? Where this time it's not the Fed bailing out in any way. It's a bunch of other financial institutions and a little bit of private equity in there. You have, I think Citadel is one of the smaller names. When I say smaller, I mean smaller in terms of what they put up relative to the other companies, what they put up. So then also, like, we're definitely going to go on the bank term funding program. That's going to cease new loans on March 11th, which is literally 4 days away. And this whole New York Community Bank thing happens right before this is about to expire. And then also, I'm going to kind of get to this later. I'll go more in detail. But this, if this is true, I haven't seen like the specific spot it came from, but where it went from 8 to 52 in the final months of 2023, the biggest jump since the demise of SVB. That's what the FDIC said in terms of weak banks. Not a very good sign, but ever since the minimum requirement, right? Like the totally blanking out the percentage of like actual money the bank has to hold, like deposits, like what they actually have in total deposits, they have to hold like a percentage of that as like their reserve ratio. That was pretty much made zero, as far as I'm aware, when everything started happening in March 2020 with all the craziness, right? So since then, what has the government done? Just print a ton of money, right? And it's not just the U.S., it's worldwide. There's just mass inflation. I've been keeping up a lot of what Peruvian Bull talks about, and he calls it like a melt up. And it makes sense, right? Because look at all assets right now. You look at Bitcoin, you look at gold, you look at stock market, you look at Nvidia. Like Nvidia is just insane. Like I get it, like AI is huge and big and growing, but the fact that it's almost worth as much as Apple, I think I saw something today that it only needs to go to like 10,000 or no, sorry, 1,050 to be worth more than Apple. If so, that's pretty crazy. That's actually nuts. Like again, like, oh yeah, there's all this growth in this and that, but it just seems like ridiculous valuation it's trading at. And I'm definitely not the only one saying that, but at the same time, we're in an absolutely ridiculous market. And it seems like maybe it's one of those things where the money has to flow somewhere. Like nobody wants to hold cash because it's being inflated away, or it's like purchasing power is declining over time. So people are just flowing into assets. Institutions are flowing into assets. I've been seeing that BlackRock, they have the ETF set up for Bitcoin, right? And now they're trying to set it up where a couple of their other funds will actually own the Bitcoin ETF within it as part of an allocation of that fund. So that tells me they're wanting something that's as a store of value. Maybe that's a perspective on it. We'll have to see. The filings are basically just saying, I should have got those pulled up as well, but I kind of want to go more into Bitcoin on a separate day. Like I want to get some more stuff prepared. I've become increasingly bullish on Bitcoin. I'll definitely say that. I just feel like I really, really understand it more and more as time goes on. But basically, BlackRock's just filing for the possibility of them holding the ETFs, right, within these other funds. And they're not like high risk funds, but just because they're filing it doesn't mean it's going to happen. Like the filings say they can invest in that, they may invest in that, but doesn't mean they necessarily will. So time will tell with that. Although Bitcoin's floating near a new high, but what's weird with Bitcoin, it's like out of nowhere, it just dropped like 10,000 and then bounced right back like earlier this week. So what was the deal with that? I saw that a huge wallet sold like after it mined Bitcoin like 10 years ago, and then it just suddenly decided to sell. So there's all kinds of interesting things going on in the market, to say the least. That's for sure. Let's see. Get your shit out of here, fake expert. What's going on? Tetron, we sign a basketball. If I send you one, fake expert. Damn it, expert. I don't know. He confuses me, man. But yeah, no, I'll sign a GameStop shirt for you. How about that? Maybe something along those lines. I'm not a big basketball guy. I'm more of a hockey and football guy in terms of sports. Only one king, and that's the Lizard King, Expert himself. Expert, what a guy. Ryan, welcome back, my man. Ryan, I hope you're doing well. It's great to see you. Don't care what all the haters say. Expert's an idiot, small energy weirdo, lazy motherfucker. Expert wastes his money on stupid shit. Hey, that hater's gonna hate, right? Nah, man, I don't believe any of that. So everyone knows you have a fake Expert account. Damn, Expert versus North Star. The trolling. But let's get into GameStop here. No, really, it's so great to be back, and got to get back in the swing of things. But I'm trying not to think too hard because I feel like as I was getting ready to come back, I started thinking so hard, like, oh, I got to make the right return, like I have to be perfect in whatever which way, and then I'm just like, all right, like, why don't I just start doing it again and go back to my old strategy, just figure it out as I go, like just keep wanting to improve, and that's the best way to get better at something, right? Repetition, just keep doing it. So here we are, back at it again. But I have the reports pulled up, so definitely want to look at last year's full year report and look at how the numbers might be different, what we might see changing. One thing I'll say right off the bat, in terms of store locations, honestly kind of think they're going to close some stores. Thinking about it and seeing that there is, let's see, pull it up quick, like the amount of leases that are expiring this year. See, there's a ton of leases that were set to expire throughout 2023. So I wonder if a lot of those leases were not renewed, considering the high interest rates right now, and also just declining foot traffic in general, I would say, in malls, or just things are shifting more and more online. And when you see what the companies are doing as a whole, they're cutting like SG&A and focusing on margins over revenue right now. It would seem to make sense to close any locations that are unprofitable. And what like small things they did in the beginning with Ryan Cohen and new management coming in and taking over things, they implemented something called SAP technology, which nothing groundbreaking. A lot of retailers use it. It's basically just gives you analytics on like the products you're selling. But one of the things Ryan Cohen said, like when he first entered, was the company has been underinvested in and just underdeveloped. Like I'm paraphrasing here, but essentially, while it seems like obvious, like every company would have these kind of analytics, it seems like GameStop didn't have like the proper data and the proper like teams in place, like putting the information to good use. And like an example of that would be if you see like a particular region is selling more of a particular product, right? Like maybe more like collectibles, then you want to sell more collectibles there. And as you have more time with the data of all the sales of the customers, you can start to make better and better decisions. And I also think it's a matter of looking at what stores are not profitable and maybe what stores are in locations that have other stores around it closing down, because I can tell you I used to work at a Marshalls and it was next to a couple other stores, and if or just hearing about the other Marshall stores, mine was like a smaller store, so there wasn't a lot of stores around it. But Marshalls and other malls that were starting to struggle were malls where they were closing a lot of other retail stores, where people would go, "Oh, well, while I'm here, I'm going to go to this store." It's like to the same effect with GameStop. It's like, "Oh, well, I'm here to grab like some clothes at Target. Hey, GameStop's over there. Let me maybe go grab a new game. Let me pop in. Oh, I needed a gift for my nephew anyway. Like, let's go stop at GameStop." Things of that nature. So we'll see. And one thing that is for sure, they did announce, what did I have it up here? So this is a warn notice, which basically just says, like, hey, just so you know, like, we're going to be laying off a lot of people. So either like a massive layoff or a closure, they pretty much have to give a notice. So GameStop is winding down the GameStop Fulfillment Center. 155 people affected. Effective date is between March 15, 2024, which is coming up, and September 30th, 2024. So it seems like something that's going to be wound down throughout the year of 2024 on its closure. Initially, I saw this and I'm like, that's a little bit concerning, considering this was one of the fulfillment centers that was opened post Ryan Cohen era, like post his initial buy into the company and stake and just the whole Ryan Cohen era, I would say. But then I can look at it the other side of it where it's like, okay, they've had it in place, they've got the analytics on it, and it's like, okay, well, maybe we actually don't need this and there's a better way we can go about it. And it seems like the theme is just slimming down the business to be as most efficient as possible and just focus on the customer service. They're launching a credit card as well. That's something that's coming. And the Bears will say, oh, that's nothing groundbreaking, like every company has a credit card. Exactly. Every company has a credit card. So why doesn't GameStop? So now they do. So I think that's a great thing. And just doing these small things, like I really think it adds up. But of course, like it's not gonna just magically make them worth like a ton of money, right? Like they're gonna have to either buy back stock, make some kind of move to get revenue growing again eventually. There's obviously other factors, but I'm just saying it's evident to me that management keeps doing the right things in the short term. When the right opportunity arises, they'll pounce on it to create more value in the long term. That's my perspective. You're more than welcome to disagree. I'm sure the Bears will disagree. There's one count, what is it, on X, that always comments on like everything I do, like Stop Web3 Gaming or something like that. And honestly, I'm like flattered because that person is taking like time out of their day every single day that I tweet to like comment something negative. It's like, one, you're giving me like free interaction. You're helping the algos like help more people see my posts, so thank you. And number two, like you're spending your time like looking at my stuff every time. So it's like he's pretty much a fan. So shout out to you, Stop Web3 Gaming. But in terms of Web3 and gaming, with GameStop Player, GameStop NFT was wound down, and they keep citing, just like the wallet, that it's related to scrutiny and the regulatory uncertainty of the crypto space, which makes sense. And I think if it's something that's not taken off, you don't want to be held down and deal with that. And we're seeing it where there is a lot of regulation trying to be created around it, and this seems to happen every like crypto hype cycle, right? Where suddenly they're trying to like make all these changes, make all these rules, all these ideas are being thrown out there. So we'll see what the actual like regulations are. Maybe something they could potentially bring back. But my thought is Player could still be a thing, but maybe it's a trial and error thing where it's like, hey, maybe this isn't what we're going to move into now, but we've gained some knowledge on it. But based on some of the patents, which is another thing I was going to get to, over here we have CandyCon Topper. Looks like a new GameStop logo. I saw people posting that. That's what made me kind of look up the patents again. Stylized forward and backward C. Interesting. CandyCon. Not sure what that is. So yeah, CandyCon Topper, and you got CandyCon, and you have this like double C thing, which I guess is CandyCon. So what is CandyCon? Someone had said, what is CandyCon? Con is a fair like Comic-Con, and I was like, oh, that's pretty good thought. Like I actually didn't even think about that. So we'll see, right? I'm just as lost as everybody in terms of it. If anyone has any knowledge, feel free to drop it in the chat. But just going to keep an eye out and see what they say. I get the frustration where some people come from to kind of address this, where it's like the company hasn't said what they're doing in a while. But at the same time, like just for the nature of the situation and the whole history of it, it's like anything they say is used against them. So I would rather them just come out and be like, okay, here we are. Here's what we got. This is what we've been working on this whole time. And again, I also understand where the Bears are like, oh, well, they did this NFT marketplace thing and it didn't work out. But I don't see it as something where they've lost a lot of money on it, right? Because if you look at the most recent earnings report, like Q3, or this is, yeah, Q3, SG&A was very much improved, right? It went from 387.9 million to 296.5. Like that's a huge difference. And then in terms of percentage of net sales, because that's really what you want to measure it on, it went from 32.7 to 27.5. So that's like a 5% decrease, which is very, very nice. And I expect SG&A to continue to go a little bit lower, and then pretty much just stable, right? That's kind of what I'm looking for. And then net loss, like they were so close to profitability, and that's in compared to a net loss of 94 million for the year last year. And I think I tweeted out the other day, they pretty much need like 20 cents of EPS to be overall net profitable for full year 2024, or I'm sorry, 2023. So they're close, like they're really close. And a lot of the cost cutting that took place throughout 2023 wasn't necessarily reflected in like Q1 or Q2. And again, I understand like the bears like, oh well, there's still nothing here. Like, what is GameStop doing? It's like, it's like people discount what happened in the past, and like you could think whatever you want about naked shorts and just suspicious things that happen in the market, but I think it's a very unique situation, and whatever is like underneath and however it's been buried and whatever the specifics are, if the company just is able to consistently turn a profit and starts buying back shares, maybe they don't even buy back shares, they do some other form of shareholder value being delivered, and like either not necessarily dividend, I don't think that's the right move right now, but maybe something they acquire and they integrate or whatever CandyCon is, right? If they do, as long as they're profitable, whatever's underneath will brew to the surface at some point or another. That's my prediction. That's my theory. You're more than welcome to disagree. And how exactly it looks, I couldn't tell you. But really, what I'm looking for is for them to be consistently profitable. As long as they're consistently profitable, I think they're in good shape. And I think that's why they're prioritizing margins over revenue right now, especially the net margin, because you need a net margin and you don't want to take out debt in this high interest rate environment. And they still have a great balance sheet. And that goes back to my original post over here a while back, right? Back in September 8th, GameStop's strength of GameStop's balance sheet provides them with the opportunity to focus on the long term. They had $3.92 per share in cash equivalents, and marketable securities, which is over 20% of the share price when it's at 1960. Right now we're at like 15, so it's over 25% of the market cap is in cash on their balance sheet. So then it comes down to delivering shareholder initiatives, kind of like I was just talking about. But the fact that their balance sheet is strong is a huge, huge deal in this environment. And on top of it, you can earn on your cash equivalents, and marketable securities in the meantime, taking advantage of the higher interest rates. Not to say, with the high inflation, that's the greatest thing. Just stack a bunch of cash and keep it forever. They got to do something with it at some point or another. And that's why I also think like share repurchases at some point or another are coming. Exactly when, I don't know. I'm starting to think like with net profitability, it makes sense, right? It would really make sense, but that's where you have to trust the management team a little bit. And in general, when you're making an investment, right, you want to study the management team because the management team is ultimately the one making these decisions, and you want to have confidence in the management team because they're the ones that make these decisions. And when you do any investment or make any investment, you should research the management team and make sure you believe in them as much as you believe in the company. In the case of GameStop, I believe in them, so that's just me. Let's hit the chat real quick. Everyone knows you have a fake exit. Let me catch up. Moran, it's so good to see you, man. I hope you're doing well. I've been keeping an eye on your stuff. I got to look at more stuff, though. I started watching the video today. I got to finish it of the preview where I think you said like you're expecting 200 million on the bottom line for GameStop. That would be awesome to see. And I got to finish that, man. And definitely got to talk soon and catch up. Sorry, I've been off the grid. Sorry to all of you that I've been off the grid, but back, ready to roll, ready to lock it. Let's see, bro. Where the hell have you been? Welcome back, Chad. Slacking. That's the shortest answer. No, I guess a little bit overthinking. Um, Not even overthinking, but just taking time to figure out a lot of stuff, right? Like, and I don't say this what I'm about to say, like, oh, like look at me or something like that. Like, I'm only 23, so I'm trying to figure out like a lot of other aspects of my life and just trying to build like good habits because college, I did with a lot of other college kids do, like party, have fun. And something was kind of lingering throughout. And I'm trying to just be more disciplined, eat a little bit better, just do all the small things right. And that's not to say like that's why I stopped streaming, but just trying to get myself organized in other areas and like just better myself and just do a lot of the small things right. And yeah, I got a little bit maybe too caught up in that, sort of, but I'm here. We're back. And truth is like there's no excuses, right? Like no, like the world doesn't care what you have going on in your life. It's like about is you execute or you don't. So like, all right, I'm here. Let's execute. Well, the truth hammer himself. That's right. I like that. Mr. Morantz is the truth hammer. Makes me even want to watch. You're good, Morantz. No worries, man. Not even the real romance. Not even the real Morantz. North Star, you're hilarious. Big T, good to see you. Don, hope you're doing well. Who's the guy respectfully here? Me? That's me. I'm Tetron. Yeah, let's go Taika. Is to believe in GME. Taika Loopring. Oh yeah, I've got to look into all that, right? Like I've kind of lost touch with the crypto space. So I believe in Bitcoin and I believe in Ethereum's use case. It's the supply is a little concerning to me, and that's something I'm still trying to grasp more. But I don't mess with altcoins in any which way. I have a tiny little bit of loop ring, but that's just kind of just like I'll let it ride forever. And if it goes up a ton one day, great. If not, like so be it. But for me, I'm a Bitcoin and stock guy. That's pretty much it. Good to see you streaming again, Tetron. Annie, thank you very much. Hope you're doing well. I wonder if the return on investments under Ryan's leadership will be in one of those GME mystery boxes. Yeah, Don, that's also another good point where since the last earnings report, or I believe it was shortly after, where it came out that Ryan Cohen has the ability to make investment decisions. Was that a filing or maybe it was a newsroom? So he became CEO on September 28th. So about 6 months ago at this point, a little bit less. When the report comes out, it'll be about 6 months, right? Because October, November, December, January, February, March. And because he started at the very end of September, so it's basically October. So about only 6 months in to his tenure as CEO. I'm trying to find where it was filed that he was going to be able to make changes. Is this it? Daniel Moore, we've put him on the company and the manager responsible for the action. Okay. I don't know what this is, why this is a filing, just like a one-page document. Maybe it's not in here. Filed by insiders. But pretty much Ryan Cohen can invest the company's money. And I've seen a couple people throw it out there that he buy Bitcoin. That would be very interesting. I got to think about that more before I truly comment on that because it's an interesting perspective. But and then also like what originally when it happened, people say, "Oh, he's going to basically make GameStop a hedge fund," similar to how when Warren Buffett fully acquired Berkshire Hathaway, like it was just a textile company or something of that nature, and then he pretty much just started buying other companies in the name of that, and then it just grew into what it is today. People say like that's what maybe Ryan Cohen's going to do with GameStop. That would be very interesting. Maybe we'll get some more insight on that in the report. That would definitely be cool to see. I mean, any insight on anything they're doing is always nice to see. So we'll see if we get any of that. Let's see. Good to see you. We are still holding, but even more excited for our stock. Jackson's? Good to see you, man. Hope you're doing well. It was on 10Q. Thank you, Marantz. I knew I saw it somewhere. I knew it was like definitely officially filed. It wasn't just like someone throwing it out there. But speaking of the reports, let's look at last year's and this is last quarter, right? So SG&A we already talked about has significant improvement. And they're still able to earn down here on the interest income. Again, not something that's going to be groundbreaking, but while they have the cash on the balance sheet and a high interest rate environment, you can at least take advantage of it. So you can see like they're so close to profitability. And when you accumulate all the reports, as I said before, for this year so far, they pretty much need about 20 cents EPS to be full year profitable. So that would bring me to last year's, and we'll see about the stores, right, to finish on that point from before. I think if you have the analytics and the data and the information to make informed decisions, while on the surface the bears are going to say, "Oh, it's so bad that they're closing stores," but if there's another store within radius and that store is doing well, but this one is falling off a little bit, and kind of like I mentioned before, maybe foot traffic in that area as a whole is falling off, and you have some data on that, you can make those decisions to just continue to operate like as efficient as possible. And again, that goes back to the management team, believing in the management team to do so. And then this is the facility that is going to be wound down. So that's literally the largest one, the York, Pennsylvania, as we talked about here with the Warren notice, where it's going to affect 155 people. And again, I understand where people might be like, "Oh, that doesn't sound very good," or "How could that be a good thing?" But again, if you have the information, you have data, you want to make the most informed decisions. And these are tough decisions to make because on the surface, it looks like, oh, well, that must mean they're struggling, right? But if it means turning a profit, and I think this is something a lot of GameStop investors understand, right? Obviously, I can't speak for everyone, but that's my perspective on it. And I feel like a lot of other people tend to have that perspective. And then this one's also been wound down. Let's see, Shepherdsville, Kentucky, distributed to consolidate our fulfillment centers and domestic sites, York, Pennsylvania, and Grapevine, Texas. So now it seems like it's pretty much all out of Grapevine, Texas, which is also where their headquarters are. So it seems like maybe it's something partly too where you want to see everything going on. You want to be able to go to that facility at any time and check in on some specifics of whatever's going on there, right? Or whatever you may potentially need to be checking on. But let's see. So what do I want to get to next? Store. So store count information. This was last year's. No openings in the United States, but they could close 69 stores. Haha, 69. Canada, no openings. Disposals, 15. Australia opened 6, closed 4. So, net, they opened 8 stores. Obviously, one of these 2 was the Milan, Italy store. That was kind of like people say like a flagship store for like a new age of GameStop, but we haven't seen anything else of that yet. So maybe we see more stores like that in 2024, but then again, maybe it's another test situation. And if you are going to do stores like that, I would only do it in major areas such as Milan, Italy, where that store is located seems to have like a ton of foot traffic. So we'll see. That's definitely an interesting thing to look at, the store count coming up. And again, it comes down to believing in the management team to make the right decisions of when to close a store and when not to close a store, when to open a store and when to wind down a store. So looking ahead to net sales, I would say, overall, like looking at the other quarters, it seems like it's going to be down a little bit. But again, focusing on the bottom line margin. So last year, the net margin was, 2021, or we'll go to the very bottom, right? Complete net after taxes and everything. 381 million, or negative 6.3% of revenue, versus 313 million, or negative 5.3% of revenue. And if they do turn a net profit, right? Like let's say net, like it's only 50 million overall. That's such a great improvement to go from negative 313 million to 50 million in profit. Like that's a huge move, especially with the fact they didn't even grow revenue. So it just really shows me like the hard work taking place within to make these changes. Again, it comes down to execution and the management team making the right decisions. Like I feel like a little bit of a broken record, but I feel like it's very true, and the numbers will speak for themselves. And then once they get to that profitable number, I want to see 2024 as a whole absolutely be profitable, right? And I thought maybe they'd be a little bit profitable a little sooner, so it's taking a little bit longer than maybe anticipated, maybe some other people anticipated, but we're getting there, right? And great things take time. It's not always going to be a perfect journey. That CNBC thing they did about Ryan Cohen, like making of a meme king or whatever baloney they were spewing, but basically they had Larry Chang on there as like a featured part, and Larry Chang said, like, turning around a company, people think it's like turning around a car. You just got to do a quick K-turn. Again, paraphrasing here. But pretty much it's like turning around a ship, right? Like a big pirate ship. You got to get the wind in the sails. You got to have the captain turning it, like, pull this way, fight the wind that way, right? So it's a lot harder to turn a pirate ship around than a vehicle, right? So I like that analogy. And of course, it comes down to numbers. They have to execute. So we have to see a net profit in Q4 and a strong one to make full year 2023 as a whole profitable. And I personally believe we will. I don't have like an official Tetron estimate yet. I've been kind of messing with some numbers just because, why not put out an estimate? I encourage everyone else to do their own estimations. And I feel like it just makes you a better investor. And, analysts can put out these estimates like that are just honestly bogus at times. Like not just GameStop, like a lot of other companies where they put out estimates and they're just so wrong sometimes. And it's like, yeah, okay, they're analysts. They've been looking at this stuff for a long time, but we're also individuals that are looking at stuff. And the longer you look at it, and again, repetition like makes you better. So the more information you look at, the more you study things, the better you can make educated guesses, right, on something like that. But of course, it's all just projections. It's up to what the company reports is what it actually is. That projections are projections. And in terms of like the sales breakdown, United States is definitely the dominant market, with Europe being second, and then Australia, and then Canada. I expect that to be pretty much the same. Don't expect anything too different there. Collectibles are generally their higher margin category. So you saw it was 13.7% of sales in 21 and then 16.3 in 2022. So throughout 2023 so far, if my memory serves me correctly, collectibles revenue has been down a little bit. So that's something, and when I say down, down in terms of percentage of sales, that's something I would like to see rise a little bit more, just considering generally higher margin items. But that's generally speaking, because then you have to look at like what collectibles, what subcategories of collectibles. Just like with hardware and accessories, there's subcategories of that. So there's a lot of X factors there. That's very general speaking. But in general, I want to see them continue to focus on margins of, like every category and selling products with good margins. And when they're expanding their product catalog, um, having better margins. And I heard Moran say this at some point or another. It was a stream or a video where they're negotiating a lot with, their like who they're buying the products from and the leases. Like they're doing like very, very tough negotiating. When I say very, very tough, I mean they're not just like, okay, yeah, we'll keep doing the same thing. Like, no, 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 like, hey, this, and this is why we should get a better deal. Or if we bought more, would you make the price per unit less? So again, that comes down to the management team executing. But moving on here, SG&A decreased 28.6 or 1.7% year over year. This year, I think we're absolutely going to see a greater improvement than that. Like we'll see a larger decrease. Overall, I got to look at all the reports again to get an idea of what the number will look like on that. And the interest income, that's also going to help them like move the needle a little bit. But it's not, again, it's not like groundbreaking stuff like the interest income, but it certainly helps, right? It absolutely certainly helps. Let's see. GameStop, let's go. Gabriel, hope you're doing well. Thanks for being here. Meow, cat that roars sometimes. Hey, long time no see. Meow, hope you're doing well. Thanks so much for being here. Can you talk without so much hand gestures? Stever, I could try, but honestly, it's a little bit Italian in me. What can I say? AMB, you're on point with your logic and comments, bro. Thank you, Don. Thank you. Yeah, so like I said, I've been trying to, keep up with things. See, there I go again. Hand motions, can't help it. But yeah, dude, it's so good to see all of you back, like in the chat. Like so many names. Like, oh my god, yeah, I've seen you before. Like it's so good to be back. Like, and right now I'm just realizing like, I waited way too long to come back. I don't know what I was doing. I was just being a fool, to be honest with you. So what else did I want to touch on here? And then soon I'm going to go into like kind of markets as a whole. And just some of the things going on. I definitely want to touch on like the Fed, like emergency program they had going on where they're doing emergency loans to banks that are struggling, and it's about to expire on the 11th. But you have the whole NYCB situation and other banks that are looking weak, and just stocks just go up and up, right? It's the forever bull market. That's what I've kind of started to call it, with Nvidia leading the charge and like AI, the whole AI like hype. It feels like it's like almost like a tech bubble of 2000, but I was literally like 1 years old in 2000, so I can't attest to that. But just based on reading about things and looking at like comparisons of some numbers, it's like wow. But at the same time, it's like money just keeps flowing in. So when you look at reverse repo, this is something I saw Peruvian Bull talk about, where the money flowing out of reverse repo is flowing into the markets, like just various assets, and that's kind of what's potentially causing the melt up, as he calls it, right now. But you never truly know with the market, and that's why you have to believe, like in the markets as a whole, you have to believe in the company, because if the market has short-term troubles in any which way, whether it's a dramatic crash or just a pullback, you want the company you're invested in to be having a strong balance sheet and making the wrong decisions through those tough times, because like easy times make weak leaders and tough times make strong leaders. So when you have tough times, it calls for tough decision making and just carefully going about things. So you got to believe in that's another reason to believe in the management team and the company itself. And you can't just like blindly, oh yeah, well, as long as the bull market, like that company will go up a lot. Like you can never think like that. But Scroll back here. Steve, you're weird up that swish. Thanks for being here. I hope you're doing well. Yeah, sometimes you guys make me laugh so much with the comments. I love it. So yeah, this is last quarter. So these are all the numbers. See if there's anything else major I want to touch on. Oh yeah, the stock split. That was, yeah, wow. It feels so long ago, right? It was as of July 18th, 2022. You know, that's a whole topic in itself of what happened there, and how it's like a stock dividend technically, and how a stock dividend is handled by the DTC a little bit differently than a standard stock split. And also another factor, right? Directly registered shares, or is it transfer agent? They started wording it different, right? Damn, where is it on here? But I think it's, all right, if we go to current reports, December, this is Q3, so this is the actual 8K. Oh, this is the same thing I had open. Transfer agent, no, computer share. Wait, we need the actual, like, filing, not the 8K, like, we need the 10Q. Okay, there it is. So let's see, computer transfer agent. Ah, okay. So on the last 10Q, as of November 30th, 2023, there were approximately 305 million shares outstanding of Class A common stock. Of those outstanding shares, approximately 230.1 million were held by Seed & Co. on behalf of the Depository Trust and Clearing Corporation, where approximately 75% of our outstanding shares and approximately 75.4 million shares for Class A common stock were held by registered holders with our transfer agent, or approximately 25% of outstanding shares. So it's been at 25% of shares for a long time now. There's a lot of speculation as to why that might be. It just is. That's just still the number it is. Other people say there's some foul play there. I don't have too much information on that, or haven't done like a ton of research on it, or I don't have enough confidence to comment on it. So I'll leave that up to you of what to think. I definitely think it's suspicious to say the least. Not saying it's definitely something, but it's interesting, right? And then also at a certain point, the wording changed, right? Because here, if I type in transfer agent, it doesn't come up. But and Seed & Co. See, it's different here. This was last year's annual report, right? That what I was just looking at here. Just keep not mixing myself up. Got to get rid of some of these tabs. So last year, or sorry, the most recent filing, the Q3 filing, this is how it's worded, right? Additional information regarding outstanding shares. And then here we have it under market for registrants, common equity related stockholder matters and issue purchases of equity securities. Class A common stocks trade on the New York Stock Exchange under symbol GME. As of March 22nd, 2023, there were 197,000 record holders of our Class A common stock. Excluding the approximately 228.7 million shares of Class A common stock held by Seed & Co. on behalf of the Depository Trust and Clear Corporation, approximately 75% of our shares, approximately 76 million shares of our Class A common stock were held by record holders as of March 22nd, 2023. The heat lamp theory, that was one thing people were talking about, where it's like, how do I describe this as simple as possible? So pretty much in times of high demand, a fast food place uses a heat lamp to keep the sandwiches hot. They make a bunch ahead of time because they know there's going to be high demand. So they make a bunch and they move them under that heat lamp and they like pull the ingredients. So it's like the same thing in times of high demand. Seed & Co. can borrow plan shares from computer shares supposedly because it's a time of high demand. So if GameStop just suddenly has a lot of volume right around the time it is to be reported, it's like, oh, there's a high demand, we need shares. That would be interesting, right? But there's a couple times that makes it look like that's what happened, but then there's one report, and again, I'm just off the top of the head here, where another report where it doesn't seem like that happened. There was no like high volume period, so it's hard to say, right? And again, that's something I'll leave you to speculate on because I don't have any like concrete research or thoughts on it right now. But that's just off the dome here. So 76 million as of last year in terms of DRS, and 75.4. So 0.4 more year over year, or I'm sorry, actually technically less, 0.6 less, which is possible. I don't know. I kind of like, seems a little odd. But at the same time, like to keep it super real with you guys, I think there are people who said, "Oh, this is taking too long. I thought this was going to be faster." Like, you know what? I'm just selling. And to me, that's a trader and not a long-term investor. But it's possible there's some people out there. But then on the other side of the coin, it's like if you were going to take the time to go ahead and directly register your shares, then why would you like if you're going to directly register your shares, you're most likely very like I would say very likely a long-term investor. And you're only going to sell unless something like really changes your mind, something unforeseen. And then at the same time, there's constantly people buying shares and then directly registering them. There's people that even buy direct on computer share. So it just seems odd that over 3 quarters, the number went down 0.6, considering the nature of the situation. Not saying like, oh, it's definitely foul play, but could be, right? Who knows? Who truly knows? That's the thing about the markets that I've learned with my time in GameStop. There's so much we truly don't know. And it's not just with looking at GameStop. When you look at some of the other things that happened, like if you look at the price action of NYCV, like it was so strange. And I think I had the information. Did I have it pulled up? Yeah, so New York Community Bank Corp disclosed its customer deposits have fallen 77.2 billion, roughly down 7% from the 83 billion it had on February 5th. Oh, it's fallen to 77.2, not has fallen 77 billion. That would be insane. So only down 7%. When I say only, I honestly feel like I expected it to be more considering what we saw with Silicon Valley Bank last year. And isn't it about 1 year since the Silicon Valley Bank situation? So pretty wild, right? How, what do they say? Like history doesn't repeat itself, but it rhymes. I mean, not that that's necessarily the case in this scenario, but it's crazy. The problem is, and this is just one account spin, right? The problem isn't that liquidity is being taken away. It's that the banks are unable to access new liquidity. This is why I keep telling people the crisis isn't coming in 12 months when the program expires. The BTFP program expire. Regional bank failures will begin after it ends on March 11th, which is coming up, right? And this person wrote this on March 6th. Loans marked as collateral at par value, book value when it ends on March 11, 20. Banks must use discount window at market value. Any bank with crappy assets, treasuries, mortgage-backed securities, etc., will no longer have access to liquidity. They want bank failures and consolidation of the system. Yeah, I've heard the joke. I think Provian Bolt tweeted it where it was like, yeah, one day it's going to be the bank of Goldman Sachs, JP Morgan, Bank of America, Fargo. Like it's going to be like a super bank where they just keep merging, right? There's just less and less banks over time. And after every crisis, they just get swallowed up, right? And the craziest thing is, in this case, right, like New York Community Bank Corp actually was the one that got the Synchrony Bank assets, right? Like they pretty much swallowed them up. And then what was it? JP Morgan Chase was the one that swallowed up for Silicon Valley Bank. So Chase is like ginormous, so they're all good, but New York Community Bank Corp, not so much as it appears, right? And people say the Synchrony Bank had a lot to do with cryptocurrency stuff and such and this and that and whatever. But I don't know. Maybe I'm going off too much on a limb here, but just seems like yeah, it just seems like craziness, right? It seems like craziness is on the horizon, but then again, is it the forever bull market? Nothing's ever going to go wrong, right? So we'll see. But I think this is a time to I'll hit the chat real quick, and then I think we'll start moving into talking about the bank term funding program coming to an end on March 11th. And I kept not it's BTFB. It's like a little bit of a tongue twister acronym, or I feel like I was going to butcher it. So I was like, oh yeah, the program, but the Fed program, that's what we'll call it, and it is coming to an end. And the details are on it here, so we'll touch on that in a second. Let's see. Eyes, what up, man? Kyle, hope you're doing well. Thanks so much for being here. Ryan Cohen tweeting a lot. Seems like he is excited. When will we learn what companies GM is investing in or will be? Good question, Jacksons. If they did take any action like that, I think we would definitely see it in a filing, like in a report. So maybe it's one of those things where It's not necessarily going to happen right now, but he's preparing. Like, he sees some kind of opportunity arising, or he sees like a pullback happening in the market, and then that some assets might be undervalued, and there might be assets that GameStop may want to invest in. Right? We'll see. It's very interesting. Like, it's definitely to be determined and interesting. But that reminds me, someone's saying Ryan Cohen. Let's see. Oh yeah, and if you guys see like Garcia or whatever, the other Ryan Garcia, this guy's like losing his mind or something. I don't know what's going on there, but not gonna get into all that. But just that, of course, that's like the second Ryan that popped up there when I typed in Ryan. So today's tweet: corrupt politicians, plus corrupt executives, plus corrupt news, corrupt institutions, corrupt schools. As you can see down the middle here, penis as the first letter after each word after corrupt, which, classic Ryan Cohen type of move. Gotta love it. I just think it's hilarious. And he's just like he's just an average dude. Like, I feel like he's like not an average dude. Like, obviously he's done more than be average, but he's just got like that average guy, like average bro, like sense of humor kind of thing, right? Or not that it has to be like a guy necessarily, but I just love his sense of humor. I just think it's like he'd be such a cool dude to meet one day. Like, that'd be awesome. Maybe I should just go to a Florida Panthers game and be like, Ryan. And then, no, I'm just kidding. I wouldn't do that. So looking for strong engineers with cloud, Java, and web experience, email tateam@gamestop.com. Be working personally with top candidates. And that's when I said, "Ooh, I'm qualified." How to learn JavaScript overnight. So, and then Kevin Malone says GameStop AI coming, maybe in some shape or form. We'll see. I don't think, just be, oh, GameStop's like an AI company now or something like that. But we'll see, right? We'll definitely see. This has to be for something. And yeah, Ryan Cohen is tweeting a lot. So he kind of goes through those phases, right? He doesn't really tweet, and then he's just like a what the fuck about the Cheerios being like a ridiculous price. And then if China wants to stabilize their financial markets, they should remove the capital controls and allow the companies to freely repurchase shares. Predict the next iPhone will be called iPhone 16. Freaking genius. And then here we are in March already with a couple tweets. We got like not back to back, but March 5th. Like, what was it? Yeah, March 5th in the morning, 11:39, and then 10:23. So not much has to do with the time. But I will say, I know there's a lot of speculation with Ryan Cohen's tweets where it's like, oh, like he's tweeting this, which means this because of that, because of this, because of that. I don't think it's always, I really don't think it's that deep. I think, maybe sometimes he's trying to hint at something or there is a little something there, but I don't think you should over complicate it. Or like some people, I see some like really bizarre stuff and I'm like, okay, like I don't know about that, like about it being all this and all that, but maybe there's some small indicators there, and I think he's just kind of like putting his information out, or like what he thinks out there. Like that's what Twitter is, right? Or X, whatever. I still call it Twitter. I feel like it's hard not to call it Twitter after all these years, right? But that's what it's all about, just throwing out what you think, right? And there's going to be people who love what you say, and there's going to be people who hate what you say, and it's just like any other social media platform, right? But it's just for throwing ideas out there. Tetron, long time no see. Hope all is well. Movier, good to see you. Hope you're doing well. Yeah, no, I'm doing good. Back on track here. I'm just happy to be streaming right now. I feel so much more like back on track. Like, especially after this too, I'm gonna feel good. Like, all right, I'm back. We are back. Or it's like that. What is it? That basketball player, Klay Thompson or something. I don't know. I don't follow basketball. It's like he's back, and he's like, God, I just think that's a hilarious clip. Any clip that people make memes out of, like, that sticks in my head rent free. Like, that's one people always make memes out of. At this point, everyone expected NYCB to get bailed out. No surprises at all. Yeah, good point, Ryan Song. And that reminds me of a tweet I saw. I think it was KN, aka Market Watch Sucks Donkey Dong. I think that's like a hilarious name. And if you guys don't know the backstory behind that, why that account changed their name, because you have your @ which is like K_N, like ENNE. I don't know if like the name, or I don't know what that means, but I don't know. And I don't know what their name was originally. But then Market Watch like featured their tweet in an article, right? Like they like inputted the tweet itself in the article. So that person changed their actual name, right? Like the name right here, they changed it to say like Market Watch Sucks Donkey Dong. So when you went and looked at the article live, it was like, here's a tweet from one user. It was like the user was Market Watch Sucks Donkey Dong. So that from the day I saw that, I was like, I like this person. I think it's hilarious. But heard about you through Marantz. Glad I got to meet you. Amber, thanks for popping in. I appreciate it. Yeah, Marantz is the man. Uh, just listen to him. I've learned so much, and he's not scared of anything. That guy's not scared of anything. And I see the crap people put out about him, and I think it's ridiculous, to be honest with you. Marantz is an incredible guy. He's been so nice to me, so good to me from the start, from day one. He just like commented like, "Hey, I like your videos," like, and he was just checking out my stuff. Like, I'm so appreciative of that. So Marantz is such a good dude. If any of you for some reason don't follow him, highly recommend you do. Um, but yeah, no, it's so great that all of you are here. It really is so great. Let's touch about touch on more about like NYCB, or like not necessarily itself, but where I was going is like the capital was raised like by former U.S. Treasury Secretary Steve Mnuchin, or Steve Munchkin, whatever you want to call him. But there's also like other big banks involved, right? And then some private equity. So this was not like a Fed bailout. This was a bailout by very wealthy individuals and very wealthy companies, right? Both public and private. So it's interesting. It's a little bit different. And are they trying to save each other? Like what exactly is going on there? You can speculate on that. But to look at like what the terms of the original bank term funding program, right? And this is straight off the Fed website, and it kind of cracks me up that like it's literally just a PDF. Like, I mean, I guess it doesn't have to be that official, but it just seems like anybody could have typed this, right? Like, or like ChatGPT, write up a bank term funding program for the Federal Reserve of the United States. Like, maybe they just did that, right? And be sure to cite specifics such as CFR 201.108B. And for my job right now, I'm about to take like this course, and reading that stuff is like the actual like particular regulations, like 201.108B, and like I'm reading some of that stuff right now, and I'm like, oh my god, like it's so hard to look at it for a long period of time. It just like fries your brain because it's so wordy, and it's so technical, like with the wording and everything. But it has to be because it's like regulation, right? And that's where like when lawsuits happen, you got to cite in terms of finance, like you got to cite the regulation, and like basically they're analyzing the language, so the language has to be as particular as possible, and then the court makes determination of the language. But definitely, it's tough for me as a young individual because I mean this is an excuse, right? I'll straight up tell you, right? What I'm about to say is an excuse. There's no excuses, right? Where it's hard to focus on things because it no, and I can tell you, for me, I'm better than most. I would say a large majority of people my age, and I find that scary in terms of like attention span because everything's swipe, swipe, swipe. Like I've tried to delete everything, like Instagram, TikTok, any of that. Like I really don't do all that. Everything like YouTube Shorts get me, right? Like, and that's what gets me. I'm like, no, like I can't delete YouTube though. I'm trying to do YouTube, so but it does Shorts. They just get you, and then you just get a lot, and all of a sudden you're like, how have I been doing this for 10 minutes? And even talking to my brother, who's a little bit younger than me, he said he has friends that like they can't even like they're doing nothing for like 5 seconds, and they're just like they just like swiping for like because nothing's happened in 5 seconds when they're hanging out, and it's just crazy, and it's like I don't know what's gonna happen to these next couple generations coming up, like mine and the following one, and especially like the really young kids that are being like entirely born into this crazy fast world where I watch a lot about like what Mr. Beast talks about and like how he does stuff, and like I mean he's truly a YouTube genius, so like I really am inspired by him, and also just his love of what he does and how he always wants to be better. And he was talking about how a video that would have been like 5 minutes, like a 5 minute video in 2018 or 2017, is now just a YouTube short at 1 minute, right? Because that's just how the game has changed, and just attention spans are so bad. And I'm trying to even just start like reading a book here and there. Like I'll be honest, I'm not like a big reader in terms of like books. Like I do read, I like reading stuff online, and like I'm always keeping up with things. So I would say I read, but that's still like click here, click there, go to this, go to that. So like sometimes I'm like, all right, I need to sit down and just like read a book. Like I'm trying to like repair my attention span, and it's incredibly difficult, right? And that when I'm studying this stuff right now for what I'm doing at my job, I'm like, oh my god, like if I'm struggling with this, like how are other people that have like way worse attention spans than me, right? So It's crazy. It's just crazy how the world's evolving. And now with all this AI stuff and the AI images, like I have a lot of fun with them. Like as you guys even see from the thumbnail, like that's an AI generated image. I think you'd have fun with it, but like it's scary when like that Sora thing is coming out where it's gonna be like create a video of this, and that, and it's gonna look like super real. Like the world is changing more and more quickly. And how I always think of it as is like I'm 23 and Google is just a little bit older than 23 years. So think about how far we've come from like the initial like Google search and how groundbreaking that was to where we're at with AI now in like 20 something years. What does another 20 something years look like? It's like how technology is evolving is exponential. And I find that horrifying because it's like, really, maybe the robots will take over. I don't know. I do not know. We'll have to see. But let's get back to the bank term funding program. To provide liquidity to U.S. Depository institutions, each Federal Reserve Bank would make advances to eligible borrowers taken as collateral certain types of securities. So basically, they put up collateral and they get a loan, right? Based through the Fed, like with the Federal Reserve through the bank term funding program. And this came out after the Silicon Valley Bank situation because they didn't want like a domino effect of bank runs, because that was essentially sort of what happened with Silicon Valley Bank. And pretty much anytime a bank fails, once word gets out, hey, things don't look so good, people get nervous, they start pulling their money. And if things don't look so good and everyone's pulling their money, that's a really tough spot for the bank. And that's why they pretty much needed that emergency capital infusion for like New York Community Bank, because if they didn't, they were pretty much done. That's what it seems like, at least, right? Borrower eligibility: any U.S. federally insured depository institution, including a bank, savings association, or credit union, or U.S. branch or agency of a foreign bank that is eligible for primary credit, C 12 CFR 201, blah, blah, is eligible to borrow under the program. Pretty much all. That's what that tells me, without looking at like the specific here. But pretty much just any like regional bank, credit union, that's eligible, they can. Eligible collateral. So eligible collateral includes any collateral eligible for purchase by the Federal Reserve banks in open market operations, provided that such collateral was owned by the borrower as of March 12th, 2023. So it couldn't be like a newly acquired asset. It has to be something they already have. They can put up for collateral, right? Such as a treasury note, right? Let's say a 5-year note that's was the bank got in like 2020, and it's like a 1% rate, but now those are like terribly valued, right? Like the value of them has fallen so much because who would ever go buy that bond now? Because you can buy a bond and get a way better rate at the current market we're in at like 5%, right? I mean, look at money market accounts. You could still earn like 5%. And I have like a high yield savings account with Marcus by Goldman, and that pays me 5.5 right now. And that's because I have like the beginner promotion where it's like an extra 1%. But besides that, if you don't have the promotion, it's 4.5. And while that's not like groundbreaking, for someone like me that I've never seen interest rates like this in my lifetime since I've managed my own money, so I've been old enough to like understand and manage money. And I talk to like other like friends of mine, like, yeah, you can actually like make money on just for having your cash. Like this is crazy. And it's because like we grew up in a period where interest rates were pretty much just always zero. So, and when you have them always zero and everything's just too good for too long, you kind of have things snowball. Then all of a sudden interest rates raise a lot. And then all of a sudden the banks are like, oh, all these other things we have on the books don't look so good, considering that you can get a way better rate now. So even if we wanted to sell them, we're going to get like pennies relative to the dollars we paid. So advance size: advances will be limited to the value of eligible collateral pledged by the eligible borrower. Rate: the rate for terms advances will be the 1-year overnight index swap rate plus 10 basis points, provided that the rate may not be lower than the IORB and rate in effect the day the advance is made. The rate will be fixed for the term of the advance of the day the advance is made. And just to clarify, all of this is going away. So this is what was in place with like this program, and now this is going away this coming Monday, March 11th, right? So literally there's only one more trading day, and then boom, Monday, this is gone, right? Like this won't be available anymore. So we'll see, right? We'll see how that impacts things. We'll see if there's other banks that this affects. And what I was going to get at here is I was seeing there was a point, or there was like a reporting on it, I don't know the specifics of it, where certain banks were actually arbitraging this system, meaning they were using this to get money borrowed at a certain rate, but they were turning it around and then earning a higher rate. So they were keeping the difference. They were basically doing a form of arbitrage with a Federal Reserve program. Like, that is not supposed to be how it works. It's supposed to be for emergencies, right? Like, it's an emergency program that was put in place. So you're not supposed to game it. And that's pretty much what was happening. So what a world we live in, right? When do banks ever break the rules? They would never do that, right? So advances will be made to eligible borrowers for a term of up to 1 year. There are no fees associated with the program. That's the big thing too, and that's how they're able to make money on it and like basically game the system, because there's no fees with it, right? So credit protection by the Department of Treasury. Treasury was using the exchange stabilized fund, would provide $25 billion as credit protection to the Federal Reserve banks in connection with the program. Recourse, the advances made on the program are made with recourse beyond the pledged collateral to the eligible borrower. Program duration. Advances can be requested under the program until March 11, 2024. And I think some people were speculating that maybe they would advance it. And then ultimately it came out, January 24, 2024. They make a press release. The Federal Reserve Board on Wednesday announced the Bank Term Funding Program, BTFP, will cease making new loans as scheduled on March 11th. So they're saying, hey, we're not changing it. We're not extending it. Keeping things on schedule. The program will continue to make loans until that time and is available as an additional source of liquidity for eligible institutions. During a period of stress last spring, the Bank Term Funding Program helped assure the stability of the banking system and provide support for the economy. After March 11th, banks and other depository institutions will continue to have the ready access to the discount window to meet liquidity needs. As the program ends, the interest rate applicable to the new BTFP loans has been adjusted such that the rate on the new loans extended from now through program expiration will be no lower than the interest rate on the reserve balances in effect on the day the loan is made. The rate adjustment ensures that the BTFP continues to support the goals of the program in the current interest rate environment. This change is effective immediately. All the terms of the program are unchanged. So there you have it. And then these are more specifics on it. Oh yeah, that's pretty much the same thing I went through. So as of March 15, 2023, the outstanding amount, and this is March 15, so this is a year ago, right? Total outstanding amount of all advances on a BTFP was $11.9 billion. The total value of all collateral pledged to secure outstanding advances was $15.8. But if what's pledged as collateral falls in value, that's a completely different story, right? And this is 1 year ago, and I'm sure there's been much more loaning going on since then. So it's hard to say where it's at right now, just based on this information. The amount of interest, fees, and other revenue or items of value received in the facility reported on an accrued basis was $662,000. Yeah, and then reverse repo, you got money just flowing out of that, and it seems like it's flowing in the markets, right? Like, that would make sense. And then here you have FDIC has added 8 banks to its program, adding to its problem list, totaling $66.3 billion in assets. Excuse me. And we have Stonkwatch here. Shout out to you. Nothing to see here. Absolutely nothing, right? With a exploding building behind him. And that kind of leads me back here. Oh, no, that's actually something I want to touch on real quick in a second. But just jumped by 18%. So it went from risen by 8 to 52, right? Struggling. So there's that. And then I wanted to quickly show this, and then I'm going to touch on one more thing for GameStop to circle back. So Scrooge McDuck tells what would happen if we printed $1 billion in 1967. And 1967, right? If you round up to 2027, holy shit. The fact that 2027 is closer than 2020 is kind of mind-boggling, honestly. It's insane. But 2027 would be 60 years later, right? Yeah, 60 years later. So 60 minus 3. This is 57 years ago. And it's like, people always knew, and it's pretty funny just hearing this.
Uncle Scrooge, why don't they just print up a few billion or so?
No biggie, right?
A few billion?
A few billion.
Oh, dear, no. My, that word billion, how it's abused. If it weren't so frightening, I'd be amused. Folks have no conception. We'd have inflation.
Inflation?
Ah, that's a mess. Your money would be worth less and less. It might take this hatful, I dare say, to buy what your piggy bank would buy today. A
Great
dollar
analogy.
wouldn't be worth the paper it's printed on.
Not there yet.
But that's not today. Oh, Hootman, my. It's what you can buy with what you've got. That's what counts.
Uncle Scrooge, why don't
Yeah,
they
I just found that interesting because that was all the way back in 1967, and it's kind of what's happening now, right? Like in a very loose sense. So just wanted to share that. I found that little video interesting. I came across it in historic vids, and I was like, huh, look at that. Talk about inflation, right? But the last thing I want to touch on today, and damn, I have to chat in a second, so let's do that, is this interesting post I saw here. Dropping, good night. All good, Gabe. Hope you have a good night. Same numbers, your content's great. Market makers. Noah, good to see you. Hope you're well. September, good to see you. Hope you're doing well as well. Let's go. Tetron GME for president. I am writing you on the ballot. Can't wait, buddy. Hey, I got to vote. Vote Tetron. I'm going to lead this. Nah, I'm not even of age to run for president. What do you have to be, like 45 or something? But hey, maybe one day. No, I'm just kidding. It sounds like a chaotic job. But hey, if you want to write my name on the ballot, I can't stop you. But yeah, so just found this post interesting. I'll let you guys think what you want of it, and then I'm going to kind of wrap up the stream for tonight. But really, thank you guys so much for tuning in. It's been a great stream back. So friendly update, Squeezy the Cow. Friendly update on the former FTX president, Brett Harrison. Brett Harrison has been quite the busy little bee since leaving FTX. Has to be the best exit of all time. In addition to what we'll discuss below, Harrison's departure from FTX former crypto boss SBF has been on trial and subsequently jailed in connection with a wide array of financial crimes associated with the failure of the crypto exchange, as well as the fraudulent misappropriation of billions in customer funds. So he was an intern at Ember, then he goes to head of trading at Systems Technology for a long time, and then senior software developer at Headline Stack. Then he works at Citadel, right? Think what you want of that information. And then FTX, and now he's becomes authorized redistributor of CME Group data, becomes authorized redistributor of CME Group market data. Oh wait, authorized redistributor. This is the same thing right here, but launches U.S. regulated brokerage for futures and options with the CFTC license, expands global derivatives offering. Launches cross-asset market data and event monitoring platform. So again, I'm just sharing this. I'm not saying this means this or this means that, but I just found this interesting because this guy also, he interviewed with Platinum Sparkles at one point too about like FTX offering the tokenized shares of GameStop stock, which was very, very strange. And they're like, oh yeah, it's certainly backed one-to-one with like a German brokerage or something like that, which was obviously total bogus, considering they didn't even have crypto itself that they said they had, like in customers' accounts. They didn't even have that, so of course they didn't have like those shares. Neither did they for these other like derivatives they were offering in the form of like tokenized shares. But it's like, why would you ever want to own a tokenized stock? Well, you could just own the stock. Like it never made sense to me, right? So why was that pushed? I don't know. Again, leave that for you to speculate. Brett Harrison launched Architect Financial Technologies. Architect, a decentralized DeFi platform aimed at streamlining the crypto market structure, equipping financial institutions with innovative technology solutions for trading futures, options, tokenized assets, and more. Again, don't really get the idea of like tokenized stock unless it's somebody that can't access the stock market elsewhere in the world or something like that, but I don't know about that. Became a licensed redistributor of CME market data. Okay. Provide clients with low latency institutional trading platform access to live and historical data across the entire spectrum of CME Group futures and options products, including equity index, agriculture metals, foreign exchange, crypto, interest rates, and energy markets. Pretty much everything. Launched its U.S. regulated brokerage for futures and options. CFTC expands to global derivatives offering. This new brokerage firm will enable clients to trade the full range of listed derivative products, futures, index options, trade at settlement futures, future spreads, and event contracts on CFTC registered exchanges. Architect will partner with the U.S. Futures Commission markets, including Wedbush Securities, StoneX Financial Inc., and Straits Financial to provide with the related clearing services. So I'm not too familiar with these. I've heard of Wedbush, but launched cross-asset market data and event monitoring platform, Architect Edge, platform for traditional and digital assets, encompassing U.S. equities, ETFs, futures, spot cryptocurrencies, potential swaps, and digital asset options will provide his customers with institutional grade investing technology that the company specializes in developing for financial firms. It's almost like Brett Harrison's ability to build an entirely new FTX like platform was fast tracked and or leveraging spare parts, relationships, and likely cashed in favors from his checkered past. Probably nothing, and they cite all their sources. So again, just interesting. Rose Up was okay. January was launched. Okay, yeah, I was like, why are these two the same? Like that looked confusing. So this is a nice graphic and just shows you his history. And again, I'll let you think what you want of that. I just found that interesting, and yeah, and to anybody involved with FTX, right? Like based on what happened there, I feel like it's hard not to be like, what's going on there? So that's that, right? I mean, we'll see. We'll see. That's all I can say. As time goes on, time will march on, right? And if GameStop's profitable, whatever's might be suspicious underneath will just, in my opinion, right, it's just going to bubble to the surface at some point or another if they can just continue to turn a profit and continue to execute. And, if you invested in GameStop in 2018 versus the S&P, you'd still be up more on GameStop, right? Of course, GameStop at this point versus here is a completely different point. So it's a different situation. But really the big thing was, what happened in January 2021, that massive price spike allowed them to issue shares to completely pay off the debt and restructure the company and lead back to like my post here about them having that strong balance sheet, which gives them the opportunity to focus on the long term because their cash equivalents, marketable security still represents at this point, right? At this time, I was saying over 20% of the share price when it's at 1960 or the market cap, right? Because if you do 392 per share or you look at this value right here, the almost like 1.2 billion in cash in comparison to the market cap, it was like 25% at that time, but around $15 a share, it's closer to like 25%. So their only debt is a very small like loan with the French government, and it has an interest rate of like literally 1%. So they're earning more on their cash than their debt, and their debt is literally only like 12, 13 million at this point. So minimal compared to 1.2 billion. So again, you can't sit on cash forever, and I don't think that will, make or break just accumulate a lot of interest on cash, but it keeps them in the spot where they're in a good shape. Like they can weather storm, they can be patient, and if you're turning a profit, you can be extremely patient. And something I've seen people speculate on, I think I said it earlier before, but the idea of GameStop buying Bitcoin, it's interesting, right? When you're looking at what Michael Saylor does, it's very interesting, right? The more I look at it, because he's essentially saying like, I think Bitcoin is going to go up more percentage wise on a long-term basis than the percentage I will pay in US dollars on the debt that I'm taking. Because they just, MicroStrategy just said they're going to issue more debt, right, to raise more capital to buy more Bitcoin. And then Michael Saylor's been asked, when are you going to sell? And he's like, sell. I'm holding forever. So he's a true Bitcoiner, that's for sure. And with Ryan Cohen's style, I don't think it's impossible, right? Like it seems like something up his alley. Maybe not. Like maybe people disagree. You're definitely more than welcome to. Please take that with a grain of salt. I'm just throwing it out there. I've seen a couple other people say it. I'm not the first to say it, but when I saw it, I'm like, that would certainly shake things up, and it would certainly be bullets in the chamber for the media. They'd be like, meme stock Ryan Cohen leader buys Bitcoin, going all in on cryptocurrencies after giving up on NFTs. Now they're YOLOing on crypto. They're buying magic internet money, right? They're going to say all kinds of things like that. So, and at the end of the day, you can, again, think what you want about all this. So you're always more than welcome to disagree. Everyone has their own opinions, right? I'm just sharing what I think, just like everyone else on the internet, right? But when you see like, forget GameStop, GameStop's dead, GameStop's done. It's like, the thing that I've learned over the past several years with the media, it's like, if you're being told not to look at something, you should probably look at it. So it's like, why does the media always say, forget GameStop, bad company? No, don't touch that. And also, if I was in the shoes of somebody that didn't want GameStop to have any attention, I would create cryptocurrencies that are a ripoff of it. I would associate names of bad stocks with it as well so that people think it's all the same thing. I would, throw out all these crazy ideas of unrealistic things happening with the company, like hit pieces such as like Katako or whatever that, like, I don't even know what they are. They're so incredibly irrelevant. And they don't, when they post, it's like literally almost nothing in terms of like likes and engagement. But when they post a negative article on GameStop, suddenly it just has like a ton of interaction, right? And it's like, oh, okay, that's surely just a coincidence, right? Again, take what you want with all this information. You're more than welcome to think anything you want. I'm just throwing it out there, calling it as I see it. And yeah, I think that's pretty much it for today. Let's see. Uh, did you get married while you were gone? Did you miss us? I did miss you guys. I did not get married. No, not quite there yet. But no, I definitely missed you guys. Yo, what's up, Tetron? Scott, hope you're doing well, man. Hope you're doing well. It's great to see you. It's absolutely great to be back. I had a great time with you guys tonight. Stay tuned next week. I'm not going to create like a designated schedule yet right now with streaming. I'm going to do at least one stream a week. I really want to get back into videos because that's also something I realized. I'm like, why did I stop posting videos, right? And I started thinking like, oh, I have to make my videos more advanced and this and that. But literally just standing there, going like this on my phone, like telling you guys what I think. Those were doing the best. And like it was kind of my bread and butter of like what Tetron started as, just sharing some quick thoughts about GameStop and other things. So got to get back to that, right? And just got to do it a couple times. I'll get back in the swing of it. So yeah, no more excuses. It's time to execute. It's win or go home, right? Or it's like execute or don't. Just like GameStop, you execute or don't. Tetron has to execute or it doesn't. It's that simple. So thank you guys again for watching. I really appreciate you all. Have a good night.